The Aussie is finally developing some real momentum. So far this week, it's been the best performing G10 currency, rallying about a cent against the US dollar to a high of 69.30 late this week, its best levels since late July. By week's end, the Aussie had settled back to around 69 cents, and the path seems open to higher levels in the near term. Reduced geopolitical risk, Brexit and US-China trade, and perhaps even more potently, the slashing in RBA rate cut expectations for the rest of this year have been the big drivers of Aussie's recent gains. Locally, the Q3 CPI and comments from Governor Lowe were the main points of interest. The annual pace of headline consumer price inflation lifted to 1.7% for the year from 1.6%. And while that's a modest acceleration from 1.3% in the March quarter, it is still below the bottom of the RBA's target. And perhaps more importantly, underlying measures were soft. The key measure watched by the RBA, the trimmed mean, came in at 0.4% during the quarter, pushing the annual rate to 1.6%, still undershooting the bank's preferred target of 2 to 3%. That is the 15th consecutive quarter of below target inflation for the RBA. But the chances of a Melbourne Cup day rate cut from the RBA are next to zero. Inflation is very low, but the RBA is more focused on unemployment and getting that lower. Indeed, RBA Governor Philip Lowe repeated earlier this week that while the bank is prepared to adjust policy if needed, they are confident low rates are supporting a gentle turning point in the economy. That suggests that the bank is prepared to wait and see how the economy has reacted to the 3 rate cuts so far this year, which has slashed the official cash rate to just 0.75%. At the start of the week, markets had been giving about a 20% probability of a Melbourne Cup RBA rate cut, but that has eased to a negligible 5% after Governor Lowe's comments and the CPI data. The Fed was also a big driver this week. They cut rates for a third time this year, but they indicated that they have finished cutting for now, dropping their pledge to act as appropriate, language that was code for further easing, and instead vowing to continue to monitor the economy. While a Fed cut had been priced in, markets still gyrated sharply. Usually, when a central banker says they've finished cutting rates, the currency in question receives a boost. The US dollar did briefly rally, but it ended the day lower, along with interest rates. It appears markets took note of Chair Powell's press conference comments that while they're on hold for now, the Fed would be prepared to cut if there was a reassessment of the outlook. Meanwhile, in the other direction, he said they'd need to see a really significant and persistent move up in inflation before they'd contemplate reversing the insurance cuts. The Fed's openness to more cuts if needed and a strong signal that any hikes are a very, very long way off also helped fuel Aussie's gains. The Fed's planned pause also takes some perceived pressure off the RBA to deliver yet more easing before year end. But the longer term picture hasn't really changed much for the Aussie, with the RBA still a long way from reaching either its inflation target and its desired unemployment rate, around 4.5%. We also expect any US-China trade agreement to underwhelm. Indeed, by week's end, the Aussie dollar was easing back from 3-month highs on a Bloomberg News report, casting some doubt over the longevity of a US-China trade truce. Chinese officials are said to be unwilling to entertain the structural reforms the US is seeking in pursuit of a Phase 2 accord without a major rolling back in tariffs. Next week is a busy one for Australia, including the RBA board meeting and a statement of monetary policy, as well as retail sales and trade balance figures for September. We'll speak again next week.